Dear traders, dear ladies and gentlemen, welcome to this video. This is another part of our MCA Trading Made Simple series. Today we're going to talk about the so-called dumb money tolerance. This is a very important concept because you will encounter these situations on a daily basis. So what do we mean when we talk about dumb money tolerance? Well, it means that there is also a tolerance for some of the dumb money positions to get into profit. However, all the principles which have been explained so far always take priority. But as you know, sometimes the dumb money can also win a little bit, and this is what we look at today. So here we see a recent chart of euro dollar on the 4-hour time frame, and you see above the price we had all these dumb money longies, below the price with all the dumb money shorties. That's why the market went sideways, because remember time and range principle, there's no need to just do a move. However, eventually they're going to make a move, and the dumb money traders who were, let's say, sticky and stick to their positions and then who were placed correctly, they, at least some of them, benefited then from the move. Okay, so this is really important. Here's the euro dollar chart after. So it broke up to the upside. Some of those longies actually got a little bit into profit, yeah, because it was more important to go against the money shorties. Let's look at another example from real life. Here with Australian dollar, we see above the price some dumb money longies. Okay, however, the price has short-term stops and MTS above the price. So with the news, they go up, they take those targets, and in this process, some of those longies were allowed to be a little bit in profit. Yeah. Now, as you know, later on, the Australian dollar came all the way down here again and killed all the dumb money longies in the market. However, in this move, which I've shown you, some of the longies actually got into profit. Okay. Similar here, like you have dollar cut, you have some shorties in the market. Okay, and then there was a house clean, but in the down move, some of the shorties got slightly into profit. Or here, euro pound recently, it was between longies and shorties, but then after a while it broke up to the upside, went against the shorties, but in this process some of the longies got a little bit into profit. So how really does this work? You may remember this diagram I made for one of the bigger videos on this channel, and this is a good guideline. So the closer you are to the price, the higher the dumb money tolerance is, otherwise the price would never move. Okay, that means, let's say we have an MTS there are still some longies in the market, but eventually they go for the MTS. Some of those longies may actually get slightly into profit. Now, of course, once the target has been taken and the price reverses, they have no idea of when to cash in the profit. So often, even if they got a bit into profit, they will not be able to cash it in. Okay, that's an important aspect. The further you go away from the price, the lower the dumb money tolerance tends to be, and we're going to look at a specific example now. So let's start again with the basics. Okay, we have the market. Okay, we have the price. We have the dumb money longies here with dumb money shorties here. The price moves around. Okay, it may take some STS here. Okay, and on the other side and in a range. But of course it will price in those longies and shorties. But eventually, especially after it, for example, cleared the counter side, some news may come and they may go up, and some of those longies, if they stick to it, could have actually got into profit. That doesn't mean that they were able to cash it in, because then it can also reverse. However, from here to here, those longies, for example, were actually in profit. This is the dumb money tolerance. Okay? Let's look at an example here. Okay, we have the MTS. The market goes flat, it goes down, it does the counter moves, takes inner range stops and all this stuff, but eventually, boom. Okay? Eventually, they go for the main target run, and maybe these ones did not benefit, but those ones here, for example, they got slightly into profit. Often then it reverses and they get back into loss. However, there was some dumb money tolerance. Now let's go a little bit more into detail, and this is actually a very, very important aspect of this dynamic. Maybe here. So, and this is really important to understand. We actually know also when the Damani tolerance is tilted in one direction. This is what you can see with the squeeze indicator. This is one of the reasons why this is so important. Namely, if we have a squeeze dynamic like here, short is coming in and the short squeeze happening, okay, what happens? You guessed it. Okay, the market will go up, up, up against them. Now, let's say some longies enter, some Damani buyers. Maybe they do a pullback and so on, but boom, okay. They prioritize the Damani shorties in the squeeze mode against any longies. Okay, you could even say that these Damani longies here, they were semi-smart because for whatever reason they traded on the correct direction, not knowing that they just got lucky by buying into a short squeeze. Yeah. However, the Damani tolerance against the longies will be higher because the Damani tolerance against the shorties is lower because we have a short squeeze. Okay, a squeeze against the Damani shorties. You see, this is very important to understand. Okay. Of course, if this upper line is green, we have a long squeeze, the squeeze against the longies, it's reversed. So then even if the shorties are on the way, the shorties are allowed to win eventually. They may delay, they may do a little pullback, but eventually they go to the big stops, the main targets, and the squeeze takes priority, okay? Dominance. Okay? By the way, to make things a little bit more advanced, let's say they took the LTS, then the lasso principle applies, which means like a lasso, they let the price fall back down, hoping to catch in some of the Damani longies which were shortly into profit. But we come to that separately, okay? Let's not do too many things in one go. But you see the dynamics, so this is very important. This is how this works. And the squeeze indicator shows you, like here when the market is empty and there's no bias, the Damani tolerance is high. This is very important. Look. It literally shows you the Damani tolerance. That's a cool, one of the cool aspects about the squeeze indicator, okay? And it shows you when the Damani tolerance is low. Okay, we are not guessing. Okay, this is very, very important. So, this is okay, important to understand. And if you go to any chart, you can see that. Yeah, like here, look, we had dollar cut with a squeeze against the shorties, a short squeeze up, okay? Sellers entering. Red position bars. The squeeze line is up, the red one. So some of the longies which were placed here, and there were not many, but some of them, they were allowed to get into profit, okay? And later on in another video, we come also to the smart money indicator, where you see semi-smart indicator, where you see how the semi-smart indicator, how the semi-smart money actually traded. And often you see these are in line with the few traders who were allowed into profit. Okay, this is super cool. Like here you see semi-smart shorties, the price goes down. All right, we come to that also in a separate video. I'm trying to really cut this whole thing here into little bits to make it more digestible rather than doing very long videos like in the past. Alright, so this is very important. Remember, around the price, the Damani tolerance is high, okay? If the squeeze lines are neutral, the Damani tolerance is high. If there's a squeeze, you know that the Damani tolerance is lowest in the direction of, you know, the squeeze, yeah? So if there's a short squeeze, some long is allowed to win. If there's a long squeeze, some short is allowed to win, okay? And of course we also have news and all of that, so eventually the price needs to move. But make no mistake, up to this point, that always the time and range principle applies. Okay, the counter principle applies. Yes, here we see some long is getting into profit, but overall they get priced in, and then we even had the big target run down in Australian dollar, okay, killing all the dumb money longies. But the more you pay attention to the dumb money tolerance, the less mistakes you will make. Because and by the way, this is also why we do not simply trade against position bars. Okay, if we see some shorties, we're not just buying. That's not how this works. We take into account the complete market and also on different time frames, and then we find the best trade setups. Okay. However, it's amazing that when you observe the MK web, you will see how rarely that happens. Yeah, like literally the algos will do anything to price in any accumulation of dumb money positions to the max in terms of times and range and everything else. So they will literally try everything up to the point where a move will happen. So that way they make sure that the dumb money as a collective, not individually, but as a collective, indeed loses overall, you see. But some traders may be lucky within that tolerance here and there, and that's these other trades where people got lucky and they think they can consistently win, and that was just a lucky situation where they were on the right side, and consistently that's not achievable. The next time they are completely on the dumb money side because they don't even know what the dumb money is doing, you see. That's the whole point of the market causality. You see the market and you can analyze it and trade respectively. Get the MK web. We made it as cheap as ever. It has never been that cheap. Okay, if you want this project to continue, to have those institutional tools to make markets more fairer, okay, to really give traders a better chance, please get the MK web, support the project. It's very important now, okay. It's a decisive phase now, whether we can get enough traders to learn the causality. Lots of love. Take care.